We're here today with Nick Geiser, top mortgage specialist at Scotiabank, to answer some questions that may be helpful to you as either first-time homebuyers and updates on the market.
So Nick, there's been a lot of changes recently that we're hearing from the government policy-wise. Also, interest rates have been coming down over the last few months. So what are you seeing for especially first-time homebuyers? How has their affordability changed?
Yeah, so we're seeing some new policy updates come out. So they've obviously increased maximum purchase price for first-time homebuyers to $1.5 million. They've also now increased the amortization up to 30 years. So 30-year amortization for any first-time homebuyer that is purchasing a default insured mortgage, so less than 20% down. It'll also for existing homeowners, as long as it is a default insured, so less than 20% down. They are also now able to do a 30-year amortization as long as it's a new construction property.
Right, so for first-time home buyers, that extension for the 30 years, that makes their mortgage payments a little bit smaller, a little bit more affordable. Can you kind of break it down dollar-wise? Do you have that kind of information for us?
Yeah, of course. So it sort of depends upon the purchase price that they're looking at. On average, it'll probably increase people's purchasing power anywhere between probably between 50 to 80,000, depending on purchase price. So it'll allow them that much more of a mortgage, which will also allow them that much more of a purchase price. It'll also obviously make it a little bit more affordable for them to buy that house, which will hopefully bring a little bit more activity into the markets.
Now, I had a question for you. We just saw a big cut of 50 basis points. How is this going to be affecting people and their purchasing power as well? We've seen that with, an amortization rate, but what does this look like in terms of basis points? Because in my perspective, a lot of buyers are just waiting on the sidelines, even though prices are so low. Like I would say houses are on sale now, like we've never seen before, but people just keep waiting. So how is this going to be beneficial to them to introduce more buyers into the market?
Yeah, so it helps from an affordability standpoint. Obviously, we all know about that stress test rate, so it'll obviously make that a little bit more affordable for them. Bringing down that 50 basis point cut will allow people to qualify for a little bit more of a mortgage, make those mortgage payments a little bit more affordable. And obviously with that, it'll obviously hopefully bring a little bit more demand into the market as well. Obviously we've seen a slowdown in the market, but we're hoping that obviously with these interest rate cuts over the next several months, we should hopefully see some activity come back into the market, hopefully early next year into the spring market.
Mm-hmm. And there's still that gap between fixed rates and variable rates. So right now you can get a cheaper fixed rates. Variable rate, I don't know, what is it, like a 1% difference right now? It's a little bit.
Yeah, so after the last rate cut, there's about a 1% to 0.75% difference between a fixed and a variable. So again, depending on everyone's circumstances, a fixed is still a good option, whether you're looking at a 2 or a 3 year. The variable is always a good option as well. Historically, it's always outperformed a fixed. And in today's day and age, knowing that interest rates are coming down, it probably makes sense to consider it as definitely an option to look at.
So when you've been helping out clients with a 3-year fix or 2-year fix, what have you been able to get them approximately? Obviously it ranges from person to person, but what is the range that we're seeing for like the 2-3-year fix?
Yeah, of course, the question everybody wants to know. So yeah, it really depends upon obviously the application itself. But the biggest thing is whether it's an insured mortgage or an uninsured mortgage. So we always have lower interest rates on insured mortgages. So insured obviously being less than 20% down again. In those right now, you're generally seeing anywhere in the lower 4% range. For like a 2 or 3 year fix, you're seeing those in the low to mid 4s. And then for a variable, you're generally seeing around, with the new rate cut, you're seeing anywhere between 5.1 to 5.5, let's say.
So I have a question for you, and this is like totally sporadic. I'm a team variable girl, always. I mean, I struggled the past 2 years, but I'm a team variable girl. What do you think most of your clients end up going? Are they team fixed or team variable, or is it really situational based on like the advice you give them?
Yeah, a lot of it's situational depending on what they're purchasing for. If it is a rental property or if it's a primary residence, whether it's a first-time home buyer or a more experienced buyer, a lot of it depends. During those low interest rates, I would say we were doing probably about 85 to 90% variable rates. We're seeing a lot more fixed now. So a lot more people on the fixed train, just hearing stories from family or friends that maybe got hurt a little bit or burned a bit, I guess you can call it, during the higher interest rate. So we are seeing a lot more fixed right now, but we are seeing more variable come out in the last couple of weeks.
Cool. And we recently did a podcast episode and Jess was like, yeah, team variable, I suggest variable. And I was saying I've always done variable too. Right now I'm at a fixed, but
Yeah.
I've typically chosen variable as well. But my perception is that if you can get under 4% fixed, I tell people, in my opinion, do it. But Jessica's like, I don't know, so I'd love to hear your perspective on it.
Yeah, of course. It is a good rule of thumb, the under 4. I think we will see probably interest rates settle like they were sort of before COVID, 2019 times, where we were in that mid 3, sort of high 3%. So yeah, if you could lock in something now on a 3 or a 4, even a 2-year below that, even around that 4%, like a 4.1 or a 4.2 for a 2-year is a very good rate nowadays, especially because you can only renew that mortgage 6 months early.
Yes.
Right, so a 2-year term is really only 18 months. Allows you that flexibility to sort of take advantage of lower rate in the future, but you also have that lower payment right now, rather than a variable where you're stuck maybe on that higher payment for the next little while.
So as you're giving us these tips, is there like any Nicholas tips or Nick tips that you would tell us that, you give to your clients that would be helpful when they're looking at mortgages? Obviously they're going to go with you, but things that they should consider, things that they can use to, get their property appraisals higher. What are some tips that you have? Because I know you got me an appraisal in less than 24 hours and my clients were able to close. So
yeah, the nice thing about Scotia is obviously we have a very good underwriting model. So we have a one-to-one relationship with an underwriter. So she basically reviews deals the same day that they're submitted. In terms of tips or tricks, it's just about having sort of everything ready. If you are looking to purchase a house or you're looking to do a real estate transaction, just make sure you have all of your documents in order. It just makes the process that much quicker. And it's a much smoother process when you sort of have everything in order. And obviously working with someone who is more experienced and has the expertise makes it a little bit easier as well.
Great. And then something a little off topic, but people have been asking about a program that allows them to purchase a property with $0 down. I think it's called the RSP loan. Can you kind of expand on that and let us know how people can utilize it and if it's even a good program?
Yeah, of course. So the government actually not just, but in the summer released a new program where you're allowed to withdraw up to $60,000 for RSPs. And that's allowed per person. So if you are purchasing with a spouse or with another person, you can each do $60,000 from your RSPs.
And that's for first-time home buyers.
That's for first-time home buyers, exactly. And so what that allows you to do is basically each bank offers an RSP loan. So they call it a catch-up line of credit. That's what Scotia calls it anyways.
Mm-hmm.
And basically you can take that line of credit, make a contribution towards your RSPs. It does have to sit in your RSP account for 90 days in order for you to get the benefit. And then you can use that RSP obviously for your first home purchase. So yeah, in essence, it is borrowed money that you're using for the down payments. There's obviously a payment that's going to be required on the RSP, but on the RSP loan.
Yes.
But yeah, it does allow you to purchase if you do have minimal down payment or not as much down payment that's required. That is an option that you can look at.
And this can help people meet that 20% threshold versus, paying that CMHC fee of 13% if they can't insure their mortgage.
Yes, exactly. Yeah, if they have additional savings or they're purchasing within that range, then yes, for sure.
Yeah, what's great about it too is because you're making a contribution, and such a heavy contribution too, if you are using a maximum of $60,000, you get to lower your taxable income, you get a nice tax return come April, and so then you can use that refund from the government to start paying down your RSPs, maybe use it for closing costs. You have that flexibility.
Yeah, you have that benefit to sort of use that for whatever you want once you get that refund back. And then obviously the first home savings account is another good option for a lot of first-time home buyers. We're at $16,000 right now that can be contributed into their January of next year. You do another 8, so you can do $24,000. So it's another good option on top of that RSP.
Awesome. Well, thank you so much, Nick, for all these tips and tricks and breaking it down for all you first-time home buyers. If you have any questions for us, we'd love to chat. Also, we'll share Nick's information in the caption so you can reach out to him if you want to, start your journey in becoming a homeowner.
Thank you.